Good morning, good afternoon, good evening, depending on when you're watching this. This is Tom Alexander. This is the the weekend US stock market update for the week beginning Monday, November 25th. This will be a short week, holiday week. Thanksgiving in the US, it is typically a low volume week. That doesn't mean it won't be a wide, volatile week, but it is typically low volume. If volume comes in this week, it's likely to be during the dramatic events and such. So we are still at extremely critical levels in the indices. Let's just go through one by one, and we'll discuss things as we review the indices. So we'll start with the SPX. And the SPX came down on Thursday right into a very critical level. It closed just below this ledge. And then on Friday, we opened a little bit below, bungee jumped straight up, and then had a rather tepid close. Uh, Typically, off of these extreme downside levels, you will get more conviction in your follow through. So, what this does, it leaves the door open for more selling. This is such a critical level. Now, this is also seasonally one of the more positive times of the year. We'll see how that plays out. That's something that can't be traded. It's just something to make note of. The reason for that is you have a lot of chasing for performance on the part of portfolio managers. So we'll see if that chase begins next week. We could still have a ripping, roaring rally into the end of the year, but we could have a washout first. So I'm not sure where we are yet. I thought on Thursday, we were very close either to further washout and put in a good low or that rip. Well, then Friday occurred. We traded lower, higher. Now we close in the middle of the range in the SPX. Let's look at the INDX. Very similar in the NDX, except the NDX actually, it took out that equivalent level in the SPX. It closed above it on Friday, but you can see it closed at the midpoint of Friday's range. It's also down almost 9% from print high to print low. The Dow, similar situation. The Dow had this crazy day on Thursday. There's a level not too far below where we traded last week, closed in the middle of the range. Look at the Russell. Now, the Russell is showing relative strength. The Russell acted on Friday more like you would expect the indices to behave if we were coming out of a short-term compressed condition and we were putting in a low that we wouldn't see again for weeks or months. And the New York Composite, broadest of the indices, it sort of mirrors the structure of the Russell. It's far more positive than the NDX or SPX or Dow. Let's see. That pretty much covers the indices. Okay, let's look at the internals. Now, if we landed on NYSE data. The red is a 10-day, the red line at the bottom is a 10-day moving average of NYSE advancing issues. The green is a 5-day. The 5-day reached an extreme on Thursday that we had not seen since last April. Now, that doesn't mean we have a low, but it is some indication of a downside extreme that we have not seen for many, many, many months. The 10-day spiked just below a level that has marked important lows in the uptrend since the April low. However, it can go a whole lot lower. And then last but not least, VIX. And VIX spiked on Thursday to the highest level that we've seen since the April lows. It did come in some on Friday. So Now, VIX is going to, if we crater on Monday, VIX is going to spike again. VIX is not at some sort of extraordinary extreme, but it has not been at some extraordinary extreme for quite a while. So, guys, that's where we are as we head into this Thanksgiving week. Again, it's likely to be low volume, especially after Tuesday. Uh, Please like, subscribe, hit the notification bell, make comments. Happy to answer any comments you have. You guys have a wonderful weekend. Have a wonderful Thanksgiving.